Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail. With me is John Lawrence Reynolds, author of The Skeptical Investor, his latest book, and his earlier book, The Naked Investor. John, let's talk about mistakes that investors make. What are some of the most egregious errors you've seen investors make?
Well, I think the errors I've seen them make are based not so much on their lack of knowledge of how the industry works, but with the industry activities itself. We have to remember that the industry has no money except the investors' money. We also have to remember that the industry generally spends probably as much, some people think even more, effort on marketing what they sell than they do in managing your investments.
So it sounds like avoiding mistakes is like avoiding bad products in a sense.
Yeah, it's understanding that the industry is out there to make money from, well, look, let me give you an example. They do what I'd say in the book, Crossbreed Investments. Right now, for example, we're being bombarded with marketing material on something called an actively managed ETF.
That's sort of a cross between an index-hugging ETF and an actively managed mutual.
Yeah, and of course the industry says, you're going to have the best of both worlds. No. You know what that's like? That's like crossing a Holstein cow with a thoroughbred horse and saying, hey, this is great. You get milk every morning and on Sundays you can race it at Woodbine. It doesn't work that way. Keep your investment simple. One more guideline, by the way, which I know you support, is never invest in something you don't understand. If an advisor, if anyone says, here's a great deal, look what it does, if you don't understand how it works, hold on to your money.
You know, I've often thought that anything new is almost automatically bad in the investment industry. What do you think about that?
Well, we've had bonds and stocks around, basic stocks, for a couple of centuries now, and as far as I'm concerned, they're still going well.
John, let's talk about some other products that you don't think investors should be interested in. Maybe you could just list a few for me.
Well, two come to mind right away, Rob. One are wrap accounts, which says, hey, this is great. I'll sell you a product and somebody over here is going to look after it for you. Well, it seems to me that both of those people, the person selling it to you and the person looking after it, are making money from your money. That's at least one person too many. The other aspect is something called principal protected notes. I talk about these in the book, and I think these are outrageous creatures crossbred by the investment industry to make money for themselves and are blatantly not in the interest of the investor. Stay away from them.
Now, I see a lot of the banks are marketing index-linked GICs. Those are very much like principal protected notes, aren't they?
Oh, yeah, sure. You take an animal over here and nobody likes it, so you call it something else and sell it to somebody over here. It's still the same creature, and it's not in your interest.
So you're saying avoid those market-linked GICs the banks are selling?
Yeah, I come back to, if you don't quickly understand not only how they work, but how you benefit from them, stay away from them.
Okay, so stay away from what you don't totally understand.
Exactly.
Thanks, John.